day, everyone. Good afternoon, good morning, good evening, wherever you are listening to me. Thank you very much for your time. Thank you for making it to watch my analysis today. Uh, we'll be looking at uh, this particular currency pair, which is my favorite currency pair. I usually trade this currency pair more than any other currency pair. So today we'll be looking at uh, 5 things that we need to look for before we place any trade. What are the 5 things that we need to put in place before we place an order? What are the 5 things that we need to take note before we enter any trade? So those are the things that we'll be looking at today. So today we'll be looking at those 5 things that are important before we enter any trade. Before you enter any trade, you need to ask yourself some questions. You don't just place your money on the forex market without understanding the concept and those things that you need to take note of. Like for instance, you cannot just walk out of house without going to a particular place. That means person is just aiming without any target. So what are the 5 things that we need to consider? Those things that we need to consider before we place any trade. So we'll be looking at those are the things that we'll be talking about today. Number one, from those 5 things that we need to take place that we need to consider before we place a trade is market structure. What is the market structure? What is the market structure? So consider the market structure. The market structure. And what do we mean by market structure? That is, what is the part of the market? Is it upward direction or downward direction, or is it range? So we need to ask ourselves that question before we enter any trade. What is the market structure? Like for instance, this particular pair now, you can see that presently on 1 hour time frame, it shows that the market is in uptrend. The market is in uptrend. So it gives us a clue that this market will be looking for a buying opportunity. We're looking for a buying opportunity. So on this particular pair now, which is USD JPY, we are looking for a buying opportunity. And what are the things that we need to know? What is the part of the least resistance? This is a resistance. This is another resistance here equal to support, and this is another resistance here. So what is the part of those resistance? Then up, is it upward movement? Like this is moving upward. Now let's check another pair like this. Now it shows that it's in downward movement. It gives us direction of the market to know where to enter the trade from. Then second thing that we need to consider is where is the area of value? Where is the area of value? That is, where is that area that buying pressure, if it is for an uptrend, or where is the selling pressure is coming from? That is the area at which the buyer is going to take control. Like for instance now, here is area of value, in this particular pair is an area of value. Here also is an area of value. Here is area of value. Here is another area of value, and this place is an area of value. You can see that all those places that I put my cursor in, they are a place at which the buying pressure comes from. So that's where the buyer take the authority from. That's where their power lies, and that's where we can put in our entry. So that's at area at which where the buying pressure is, and you cannot just determine that without using some indicators like support and resistance. You can see I've drawn my support and resistance on this particular pair now. You can see my support and resistance here. This is support equals resistance. This support equals resistance. This also is support equals resistance here, here, and here. You can see all those places. This is a resistance. So all those places are where we can determine where uh, our area of value is. That's where we can determine where our area of value is. Then the next thing is, what is the entry trigger? Our entry trigger. Our entry trigger. On this particular trade now, at this area at which we get into the market, where are we going to enter? So looking for a place where there is price regression or a break of structure through the use of a trend line, or possibly area where the market break our trend line now. Take for instance now, this our 1 hour trend line now, can see that the market has already break this trend line here. We break it here, then we reverse back to the trend line. So this is an area for a possible sell. This area now is the area for a possible sell for us. When you look at this trade very well, this is an area for us for a sell, because this trade has already broken our trend line. This is a live market now. It has already break our trend line. You can see that this market has broken our trend line, and that will reverse back to the trend line, and it's already obeying that now. You can see it now. You can see it. So, and you have to look for a possible entry trigger here. And what are the things that we use for an entry trigger? We look for whether a solid body candle that is going to break this particular. Let me change this uh to purple, so that you can know that that place is a place that we are looking for a selling opportunity there. So this place now, it shows that seller may likely enter this market, because there is a change of structure now. The structure of uptrend now possibly may reverse back to uh, a downward movement, can reverse back to a downward movement. So there is possibility of this market coming down. But if there is a break on this place, if there is break on this particular area, so we could go for a sell. Could go for a sell, because the market has already broken this trend line. There is a touch here, touch here, touch here, and this break the trend line downward here, and that will respect the trend line and move back to the trend line, and later continue the movement. So there is possibility of uh, selling opportunity here. possibility of selling opportunity are not discerning for the market, but that's what may likely happen. That means what may likely happen, and we'll check this by tomorrow to know how the market has obeyed our analysis. So that's what we might likely happen, if not today, but before Friday. What we draw in that place is going to affect, is going to happen, going to happen. So where is our entry now? This, if there is a break on this particular resistance equal to support. So if there is a break on this support now, there's a break on this support, we are going to enter for a sell down to here, down to here, or possibly continue downward here, possibly downward here. So let me remove this. Put this. Put it here. That's what is going to happen. That's what we are expecting on this trade. That's what we are expecting on this particular trade. Then we look at where is our exit if we are wrong. Where is our exit if we are wrong? That is when we are wrong, when what we project is not correct. Where could we uh, leave the market? That is where we are going to put our stop loss. That's where we are going to put our stop loss. That is an area where a level where you set up your stop loss. That is, it invalidates our uh, our projection. Like where I put this particular stop loss now, and it's obvious to everyone here. So it's the area at which there could be a reversal of the market, that the market may not obey this. So that's uh that's on that one. So that's the area at which we are possibly thinking if we are wrong, we can exist this trade. So we can exist this trade on that particular place if we are wrong on our analysis. So every trader also they lose money. They lose money. The only thing that as a forex trader you need to do is to know how to manage your investment, to manage your capital, manage your capital. Then the next one is our exit if we are right. That is area at which we take our profit, area at which we take our profit. So this the first take profit. There is a first take profit here. Let me copy and paste this. So this is our take profit one. Then the take profit second one is here. So I believe you understand what you are doing. Then there's still another one here as well. Let me still do another one here. So be that market may come down to this area. So that's our area of take profit from here. The first one is TP1 here, TP2 here, and TP3 here. So uh let me edit it so that we understand what we are talking. This is our TP1. Then here is our TP2, and here is our TP3. So I believe you understand what you are saying here. So that's where we are going to put our stop loss. So our entry is there, our which I said earlier that it is our entry trigger. Then here is our take profit, and here is take profit two, here is take profit three. So um you can also use some indicators also to determine where we fit our take profit, like what I just did now. This is a swing low, this is a swing low as well, and this also is a swing low. So those are the area at which you can put your your stop loss. No, we are talking about reversal of this trend now. So this place could be a string low, and this place also could be a string low. You can see from here it's a string high here. This is a string high. So this is where uh, take profit could likely be, and another one in this place, in this place. But this area is not too strong, so we cannot put to profit here. It's not too strong. Uh, uh, just one candlestick reversal here, so it's not too strong. So we cannot consider here. So this place is more important. That area is more important. As you can see that there is a big candle, a reversal candlestick, and it's thick and it's very strong. So that's where we put our take profit trade here. I believe you are following the class. Then a quick recap of what we have discussed today. We have discussed about 5 things that we need to look for before we place trade. And what are those 5 things? I said we need to look for our market structure. We need to look for market structure. What is the structure of the market? Then the second one is our area of value. I talk about area at which we set our resistance and our support. Then using some other indicators like moving average, trend line, and the likes. Then what is our entry trigger? What is our entry trigger? That is price rejection, break of structure, trend line break out, and so on and so forth. So that's area at which you can look for our entry trigger. Then what is our exit if we are wrong, which is our stop loss. So this is our exit on this particular trade. When we are wrong, then here the last one, which is what is our exit if we are right. So area at which we capture our take profit. This is the first take profit, the second one, and the third one in this place. So that's uh, the those are the 5 things that we need to consider when we are placing any trade on the market. And it's very important that you take note of those things. They are important that you know the trend of the market, you know your area of value, you know your entry trigger, then you know your exit if you are wrong, then you know your exit if you are right. So the area at which you take your profit and capture your trade. So thank you so much for your time today. I'll see you next time.